The price of petroleum as quoted in news in North America generally refers to the WTI Cushing crude oil spot price. West Texas Intermediate, also known as Texas Light Sweet, is a type of crude oil used as a benchmark in oil pricing and the underlying commodity of New York Mercantile Exchange's oil futures contracts. WTI is a light crude oil, lighter than Brent crude oil. It contains about 0.24% sulfur, rating it as sweet crude, sweeter than Brent. Its properties and production site make it ideal for being refined in the United States, mostly in the Midwest and Gulf Coast regions. WTI has an API gravity of around 39.6 per barrel of either WTI light crude as traded on the New York Mercantile Exchange for delivery at Cushing, Oklahoma, or of Brent as traded on the Intercontinental Exchange for delivery at Sullom Voe. Cushing, Oklahoma, a major oil supply hub connecting oil suppliers to the Gulf Coast, has become the most significant trading hub for crude oil in North America. The price of a barrel of oil is highly dependent on both its grade, determined by factors such as its specific gravity or API and its sulfur content, and its location. Other important benchmarks include Dubai, TAPI, and the OPEC basket. The Energy Information Administration uses the imported refiner acquisition cost, the weighted average cost of all oil imported into the U.S., as its world oil price. The demand for oil is highly dependent on global macroeconomic conditions. According to the International Energy Agency, high oil prices generally have a large negative impact on the global economic growth. The Organization of the Petroleum Exporting Countries was formed in 1960 to try to counter the oil companies' cartel, which had been controlling posted prices since the so-called 1927 Red Line Agreement and 1928 ACNACRI Agreement, and had achieved a high level of price stability until 1972. The price of oil underwent a significant decrease after the record peak of $145 it reached in July 2008. On December 23, 2008, WTI crude oil spot price fell to $30.28 a barrel, the lowest since the financial crisis of 2007. Euro 2010 began, and traded at between $35 a barrel and $82 a barrel in 2009. On January 31, 2011, the Brent price hit $100 a barrel for the first time since October 2008. On concerns about the political unrest in Egypt. History. Price history. Before 2003, a low point was reached in January 1999 of $17 per barrel, after increased oil production from Iraq coincided with the Asian financial crisis, which reduced demand. Prices then increased rapidly, more than doubling by September 2000 to $35, then fell until the end of 2001 before steadily increasing, reaching $40 a euro 50 by September 2004. Price history from 2003 onwards. Benchmark pricing. After the collapse of the OPEC-administered pricing system in 1985, and a short-lived experiment with net-back pricing, oil exporting countries adopted a market-link pricing mechanism. First adopted by PEMEX in 1986, market-link pricing received wide acceptance and by 1988 became and still is the main method for pricing crude oil in international trade. The current reference, or pricing markers, are Brent, WTI, and Dubai Oman. Market listings. Oil is marketed among other products in commodity markets. See above for details. Widely traded oil futures, and related natural gas futures, include petroleum, NYMEX crude future, dated Brent spot, WTI Cushing spot, NYMEX heating oil future, NYMEX ABOB gasoline future. Natural gas, NYMEX Henry Hub future, Henry Hub spot, New York City Gate spot. Most of the above oil futures have delivery dates in all 12 months of the year. Speculation. Businessweek reported that the surge in oil prices prior to 2008 had led some commentators to argue that at least some of the rise was due to speculation in the futures markets. CFTC investigation. The U.S. Commodity Futures Trading Commission announced multiple energy markets initiatives on May 29, 2008. Part 1 is expanded international surveillance information for crude oil trading. The CFTC announcement stated it has joined with the United Kingdom Financial Services Authority and ICE Futures Europe in order to expand surveillance and information sharing of various futures contracts. This announcement has received wide coverage in the financial press, with speculation about oil futures price manipulation. The interim report by the Interagency Task Force, released in July, found that speculation had not caused significant changes in oil prices and that fundamental supply and demand factors provide the best explanation for the crude oil price increases. The report found that the primary reason for the price increases was that the world economy had expanded at its fastest pace in decades, resulting in substantial increases in the demand for oil, while the oil production grew sluggishly, compounded by production shortfalls in oil-exporting countries. The report stated that as a result of the imbalance and low price elasticity, very large price increases occurred as the market attempted to balance scarce supply against growing demand, particularly in the last 3 years. The report forecast that this imbalance would persist in the future, leading to continued upward pressure on oil prices, and that large or rapid movements in oil prices are likely to occur even in the absence of activity by speculators. The task force continues to analyze commodity markets and intends to issue further findings later in the year. Trade currency: generally the trade currency for petroleum is the US dollar. However, with the blockade of Iran banks, Iran started talks about other currency for oil. India is even considering paying for its oil in gold bullion. However, it is more likely that India will pay in rupees. Depending on the sanctions, and increasing pressure in countries like China, which especially wants to pay in yuan for their investments in Africa, may change the main trade currency. Of course, it is rather not possible to change the currency of main markets, located on the USA ground or others in the Western Hemisphere, but increasing demand of the raising markets, and possible decreasing usage by Europe, partially USA by artificial ecology laws or economy-related shortages make the moving of the important point and volume of trade to other markets. Future projections. Peak oil is the period when the maximum rate of global petroleum extraction is reached, after which the rate of production enters terminal decline. It relates to a long-term decline in the available supply of petroleum. This, combined with increasing demand, will significantly increase the worldwide prices of petroleum-derived products. Most significant will be the availability and price of liquid fuel for transportation. The U.S. Department of Energy in the Hirsch report indicates that the problems associated with world oil production peaking will not be temporary, and past energy crisis experience will provide relatively little guidance. The 2014 United Nations World Economic Situation and Prospects report notes that oil prices were on a downward trend in the first half of 2013, as global demand for oil weakened along with the deceleration in world economic growth overall. See also, 2007 2008 World Food Price Crisis, Asymmetric Price Transmission, Chronology of World Oil Markets Events, Cost Competitiveness of Fuel Sources, Efficient Energy Use, Elasticity, Energy Crisis, Food versus Fuel, Gasoline Usage and Pricing, Simonso Tierney Bet, Stagflation, Supply and Demand, References. External links, Gasoline and Diesel Fuel Prices, EIA, Department of Energy. Historical crude oil prices. Gasoline and diesel fuel prices in Europe, skyrocketing oil prices pummel U.S. national security. Factbox: The world's oil shocks, CME future prices for light sweet crude, session overview. History and analysis of crude oil prices. NYMEX, BZ is the most commonly quoted price for Brent crude oil. 1. A fair price for motor fuel in the United States, official monthly oil price. Supply and demand discussion from OPEC, the oil and gas value chain, energy futures data browser. Current and historical charts of NYMEX energy futures chains. Live oil prices. NYMEX crude oil price chart, major oil stocks. Largest oil stocks by volume. Streaming, U.S. Energy Information Administration, part of the U.S. Department of Energy, official source of price and other statistical information.